something is happening behind the scenes that has the Iraqi Dinar community paying very close attention. And this time, it's not because of a viral rumor or social media speculation. It's because of a combination of banking developments, economic reforms, and international financial activity that, when viewed together, raise some important questions. Now, before we go any further, let me make something absolutely clear. This video is not claiming that an Iraqi dinar revaluation has been announced. As of today, there has been no official statement from the Central Bank of Iraq, the Iraqi government, or any major U.S. bank confirming a revaluation, reinstatement, or exchange rate change. What we're going to do today is separate confirmed facts from market speculation, because understanding the difference is what separates informed investors from people who simply chase headlines. But here's what makes today's discussion worth your attention. Several developments are unfolding at the same time. Iraq continues implementing major banking reforms. International financial cooperation is expanding. Large financial institutions continue modernizing their foreign currency systems. And within the investment community, many analysts are asking whether these changes are gradually building the foundation for something much bigger in the future. Could they be connected? Or are investors reading too much into ordinary financial modernization? By the end of this video, you'll have a much clearer understanding of what is actually happening, what remains speculation, and why patience is still one of the most valuable assets any long-term investor can have. Let's begin. Whenever the Iraqi dinar becomes a trending topic, one question always rises above the rest. What are the banks doing? That's because history has shown that major financial institutions don't wait until after important monetary events to prepare. They spend months, or sometimes years, updating systems, reviewing compliance procedures, and ensuring their infrastructure is capable of handling changes whenever governments or central banks introduce new policies. Recently, discussion within the Iraqi dinar community has focused on reports suggesting that Chase Bank may have been reviewing or maintaining foreign currency exchange capabilities that include currencies such as the Iraqi dinar. Now let's be extremely careful here. There has been no official announcement from Chase Bank confirming any special preparation related to the Iraqi dinar. There has been no press release, regulatory filing, or public statement indicating that a revaluation is expected. That distinction matters. However, many community analysts argue that large banks often prepare quietly behind the scenes, rather than making public announcements. Whether those interpretations are accurate remains unconfirmed. But the conversation itself highlights an important reality about global banking. Financial institutions constantly update their systems. They prepare for regulatory changes. They expand foreign currency capabilities. They improve compliance with international standards. And they do this regardless of whether a specific currency event is imminent. This means that while banking preparations may be interesting to observe, they should never be viewed as proof that an exchange rate change is about to occur. Instead, they should be viewed as one small piece of a much larger economic picture, and that larger picture begins inside Iraq itself. Over the last several years, Iraq has been working steadily to modernize its financial system. Unlike dramatic headlines that appear overnight, these reforms are happening gradually. The Central Bank of Iraq has continued implementing measures designed to strengthen confidence in the country's banking sector. Officials have worked to improve compliance with international banking standards. Electronic payment systems have expanded. Digital banking services have grown. Anti-money laundering controls have become stricter. Banks are increasingly adopting technologies that align with international financial practices. None of these developments guarantee a stronger currency, but together, they demonstrate that Iraq is attempting to build a more modern financial infrastructure. Think of it this way. Before constructing a skyscraper, engineers don't begin with the top floor. They spend months building the foundation. The foundation isn't exciting. It doesn't generate headlines. But without it, nothing else can stand. Many economists view Iraq's banking reforms in exactly the same way. The country is attempting to strengthen the foundation before pursuing larger economic objectives. Another important area receiving attention is Iraq's effort to reduce excessive dependence on physical US dollars within its domestic economy. For years, the US dollar has played a significant role inside Iraq. Businesses often preferred dollars. Citizens frequently saved dollars. Large commercial transactions commonly involved dollars instead of the local currency. The central bank has introduced policies intended to encourage greater use of the Iraqi dinar while improving oversight of foreign currency transactions. This strategy serves several purposes. It helps improve monetary control. It reduces opportunities for illegal currency trading. It strengthens transparency, and it supports broader financial stability. These policies are not unique to Iraq. Many developing economies pursue similar strategies as they modernize their banking systems. Does this automatically mean a revaluation is coming? No. But it does represent the type of monetary discipline that economists generally expect from countries seeking stronger financial credibility. And credibility is one of the most valuable assets any currency can have, because at the end of the day, exchange rates are not determined by hope. They are influenced by economic performance, monetary policy, investor confidence, fiscal stability, and international market conditions. That brings us to another factor. Investors continue watching closely. Oil. Few countries depend on energy exports as heavily as Iraq. Oil revenues provide the overwhelming majority of government income. When oil prices remain healthy, Iraq generally experiences stronger government revenues. Those revenues help finance infrastructure projects, public salaries, development programs, foreign reserves, and broader economic reforms. When revenues are stable, policymakers often have greater flexibility in managing monetary policy. On the other hand, when oil prices fall sharply, governments typically face greater fiscal pressure. This is why experienced analysts rarely discuss the Iraqi dinar without also discussing global energy markets. The two are deeply connected. A stronger economy supports a stronger currency, but a stronger currency cannot exist without a healthy economy supporting it. That's an important distinction that many online discussions overlook. Instead of focusing only on rumors, professional economists spend far more time analyzing measurable indicators. Foreign exchange reserves, inflation. Budget performance, government debt, banking reforms, international investment. Economic diversification. These indicators tell a much clearer story than anonymous internet posts ever can. And speaking of diversification, Iraq has also been pursuing broader economic reforms aimed at reducing long-term dependence on oil alone. Government officials have repeatedly discussed expanding private sector investment, improving infrastructure, encouraging international partnerships, modernizing transportation, increasing industrial production, and creating new opportunities for foreign investors. Progress has not always been fast. Challenges certainly remain. But the direction of these reforms is significant, because stronger, more diversified economies generally inspire greater international confidence. And confidence matters. Investors don't simply buy currencies because they like a country's potential. They buy currencies when they believe economic fundamentals justify long-term stability. That process takes time. Sometimes years, sometimes decades. Which is exactly why experienced investors focus less on daily rumors and more on long-term trends. And when you step back and examine Iraq's broader economic trajectory, you begin to see why many analysts continue monitoring developments so closely. The country today is very different from the Iraq many investors remember a decade ago. Its banking sector has evolved. Its financial regulations have strengthened. Its international relationships have expanded. Its digital payment systems continue growing. Its economic modernization efforts continue moving forward. None of those developments guarantee a future exchange rate adjustment. But they do demonstrate ongoing institutional progress that deserves attention. And perhaps that's the most important takeaway from today's discussion. The Iraqi dinar story has never been about overnight riches. It's about understanding a long-term economic transformation that continues unfolding one policy decision at a time. The headlines may come and go. Rumors will continue spreading across social media. Speculation will always attract attention, but facts remain far more valuable than excitement. So whenever you hear claims about major banks, secret meetings, or imminent currency changes, ask yourself one simple question. Has this been officially confirmed? If the answer is no, treat it as speculation, not certainty. That's how informed investors protect themselves while staying open to future possibilities. And as Iraq continues implementing reforms, strengthening its financial institutions, and expanding international cooperation, we'll continue monitoring every confirmed development with careful analysis rather than emotional speculation, because in investing, patience often proves far more profitable.